What makes audit evidence persuasive?
The persuasiveness of audit evidence depends on both relevance and reliability. Evidence is more reliable when it is obtained from independent external sources, generated under effective internal control, obtained directly by the auditor, documentary rather than purely oral, original rather than copied, when authenticity matters. Sufficiency relates to quantity, appropriateness relates to quality.
How do data analytics support audit procedures?
Data analytics can help auditors identify anomalies and outliers, test entire populations in some circumstances, stratify transactions by risk, improve targeting of samples. Compare trends and relationships over time. However, analytics do not replace professional judgment. The auditor must still evaluate whether the underlying data is complete, accurate, and relevant.
Why is data reliability important when using analytics or AI tools?
If the underlying data is incomplete, inaccurate, inconsistent, or improperly extracted, even elegant analysis can produce junk conclusions with impressive formatting. Auditors should consider source of the data, completeness and accuracy, whether data was transformed or cleaned properly, access and change controls over the data, whether AI outputs were independently validated.
What is audit sampling?
Audit sampling is the application of audit procedures to less than 100% of items in a relevant population, so the auditor can draw a conclusion about the population. Sampling may be used in tests of controls or substantive testing. The auditor designs the sample to reduce sampling risk to an acceptably low level.
What is the difference between sampling risk and non-sampling risk?
Sampling risk arises because the auditor examines less than the entire population and may reach a conclusion different from the conclusion that would be reached by testing all items. Non-sampling risk arises from human factors such as using inappropriate procedures, misinterpreting evidence, failing to recognize a misstatement. In short, sampling risk is a population selection issue. Non-sampling risk is more of an auditor execution issue.
What are substantive procedures?
Substantive procedures are audit procedures designed to detect material misstatements at the assertion level. They include tests of details, substantive analytical procedures. Even when controls are strong, the auditor performs substantive procedures for material classes of transactions, account balances, and disclosures.
What is the difference between inspection, observation, inquiry, confirmation, recalculation, and reperformance?
These are common evidence-gathering procedures. Inspection, examining records or tangible assets. Observation, watching a process being performed by others. Inquiry, seeking information from knowledgeable persons. Confirmation, obtaining a direct written response from a third party. Recalculation, checking mathematical accuracy. Reperformance, independently executing procedures or controls originally performed by the entity. Confirmation and reperformance are generally more persuasive than inquiry alone.
What are positive and negative confirmations?
A positive confirmation requests a response in all cases, whether the recipient agrees or disagrees with the information. A negative confirmation requests a response only if the recipient disagrees. Negative confirmations provide less persuasive evidence and are appropriate only when risk is low. Many small balances exist, and the auditor believes recipients are likely to give them proper attention.
Why is observation of physical inventory important?
Observation of physical inventory helps the auditor evaluate existence and condition of inventory and assess whether count procedures are effective. During inventory observation, the auditor typically observes client count procedures, performs test counts, inspects inventory condition, traces counts to inventory records and vice versa. It provides strong evidence for existence, but less direct evidence for valuation or rights and obligations.
How does the auditor test accounting estimates?
The auditor may test how management developed the estimate, develop an independent expectation, review subsequent events or transactions. Key considerations include management assumptions, data quality, sensitivity to changes, bias, and whether the estimate is consistent with the entity's business and external evidence.
What audit procedures are common for investments?
Common procedures include confirming securities with custodians or brokers, inspecting statements and agreements, testing fair value using market prices or valuation models, reviewing classification and disclosure, assessing impairment or credit loss issues where relevant. Investments often combine existence, valuation, and classification risks in one tidy little package.
How does the auditor obtain evidence about litigation, claims, and assessments?
The auditor typically inquires of management and those charged with governance, reviews legal expense accounts and board minutes, obtains a management representation letter, sends an attorney inquiry letter when appropriate. Litigation can affect contingencies, disclosures, and going concern, so the auditor should take it seriously.
What is the auditor's responsibility for going concern?
The auditor evaluates whether substantial doubt exists about the entity's ability to continue as a going concern for a reasonable period. Generally, 1 year after the date, the financial statements are issued or available to be issued, depending on the framework and circumstances. The auditor considers conditions and events such as recurring losses, negative cash flows, loan defaults, or loss of key customers, along with management's plans to mitigate the problem.
What happens if substantial doubt about going concern remains after considering management's plans?
If adequate disclosure is included in the financial statements, the auditor may issue an unmodified opinion with a separate going concern emphasis of matter or equivalent explanatory paragraph. Depending on the standards, if disclosure is inadequate, the opinion may need to be modified.
What are subsequent events procedures in an audit?
The auditor performs procedures up to the report date to identify events occurring after the balance sheet date that may require adjustment or disclosure. Procedures may include reading interim financial statements, reading minutes of meetings, inquiring of management and legal counsel, reviewing subsequent cash receipts or disbursements, considering events affecting estimates or contingencies.
What is a management representation letter?
A management representation letter is a written confirmation from management acknowledging responsibility for the financial statements and making specific representations about matters material to the audit. It supplements but does not replace other audit evidence.
What matters are commonly included in the management representation letter?
Common representations include management's responsibility for the financial statements, availability of all records and information, completeness of transactions, disclosure of fraud and suspected fraud, disclosure of related parties, disclosure of subsequent events, disclosure of litigation and contingencies. If management refuses to provide the letter, that is usually a scope limitation and a major problem for the audit.
How do substantive analytical procedures differ from planning analytics?
Planning analytics help identify risk areas. Substantive analytical procedures are used as evidence to detect material misstatements in specific assertions. For substantive analytics to be effective, the relationship being tested must be predictable, the data must be reliable, and the threshold for investigating differences must be appropriately set.
What assertions are commonly tested for account balances and transactions?
Common assertions include existence/occurrence, completeness, rights and obligations, valuation/allocation/accuracy, cutoff, classification and understandability/presentation and disclosure. IUD questions often ask which procedure best addresses a particular assertion.
Why are external confirmations usually stronger than internal inquiry?
External confirmations are generally more reliable because they come directly from an independent third party rather than from management or employees whose statements may be biased or incomplete. Reliability still depends on control over the confirmation process. If the client intercepts the confirmation, the evidence value drops dramatically.
What is cutoff testing, and why is it important?
Cutoff testing determines whether transactions are recorded in the proper accounting period. It is especially important around period end for revenue, purchases, inventory movements, payables and receivables. Errors in cutoff can overstate or understate revenue, expenses, assets, and liabilities simultaneously.
What is the difference between sufficiency and appropriateness of audit evidence?
Sufficiency refers to the quantity of evidence. Appropriateness refers to the quality of evidence, meaning its relevance and reliability.
What does relevance mean in audit evidence?
Relevance means the evidence actually addresses the assertion being tested. Evidence can be reliable, but still not be relevant to the specific audit objective.
When are internally generated documents more reliable?
Internal documents are more reliable when the related controls over preparation, authorization, and retention are effective.
Why are original documents generally more reliable than copies?
Originals reduce the risk of alteration or omission, especially where authenticity matters. Copies may still be acceptable, but the auditor stays alert to manipulation risk.
Why is evidence obtained directly by the auditor usually stronger?
Directly obtained evidence gives the auditor first-hand knowledge and reduces dependence on management's representations or processing.
How should the auditor handle contradictory evidence?
Contradictory evidence should be investigated, not ignored. The auditor resolves the inconsistency before reaching a conclusion.
What does inspection of tangible assets usually prove best?
It usually provides strong evidence about existence, but it does not by itself prove rights, valuation, or whether the asset is free of liens.
Why is inquiry alone weak evidence?
Inquiry depends on what people say, and people may be mistaken, incomplete, biased, or dishonest. It is usually corroborated with other procedures.
How does reperformance differ from recalculation?
Recalculation checks mathematical accuracy. Reperformance goes further by independently executing a control or process to see whether it operates as described.
What is the difference between tests of controls and substantive procedures?
Tests of controls evaluate whether controls operated effectively. Substantive procedures are designed to detect material misstatements in assertions.
What is a dual-purpose test?
A dual-purpose test gathers evidence about both the effectiveness of a control and the accuracy of amounts in the same procedure. It can improve efficiency if designed carefully.
When are substantive analytical procedures most effective?
They are most effective when relationships are predictable, data is reliable, and the auditor can form a precise expectation.
Why does precision of expectation matter in substantive analytics?
The more precise the expectation, the better the procedure can detect misstatements. Vague expectations produce weak audit evidence.
What is an acceptable difference threshold in analytical procedures?
It is the amount of unexplained difference the auditor is willing to tolerate before further investigation is required.
Why can disaggregated data improve analytical procedures?
Breaking data down by product, region, month, or customer can reveal anomalies hidden inside broad totals.
What is a sampling unit?
The sampling unit is the individual item selected for testing, such as an invoice, sales transaction, or line item in a population.
What is the difference between random, systematic, haphazard, and block selection?
Random selection uses chance. Systematic selection uses a fixed interval. Haphazard selection avoids deliberate bias without formal randomness. And block selection tests contiguous items and is generally weaker.
Why is block sampling generally less persuasive?
A contiguous block may not represent the whole population if errors cluster by time or batch. It is therefore less representative than more dispersed selections.
What is the difference between statistical and non-statistical sampling?
Statistical sampling uses probability-based selection and evaluation. Non-statistical sampling relies more on professional judgment, though both require careful design.
What is attribute sampling?
Attribute sampling is usually used in tests of controls to estimate the rate at which a control deviates from its prescribed operation.
What is variable sampling?
Variable sampling is used in substantive testing to estimate misstatement amounts in a population.
What is monetary unit sampling?
Monetary unit sampling gives larger dollar items a greater chance of selection and is commonly used to test for overstatement in account balances such as receivables.
Why is stratification useful in sampling?
Stratification groups items by characteristics such as size or risk, so the auditor can focus on significant items and improve sampling efficiency.
What is projected misstatement?
Projected misstatement is the auditor's estimate of likely misstatement in the population based on misstatements found in the sample.
What is tolerable misstatement?
Tolerable misstatement is the amount of misstatement the auditor is willing to accept in a population without changing the planned conclusion.
What is the risk of overreliance in tests of controls?
It is the risk the auditor concludes a control is more effective than it really is, which can lead to insufficient substantive testing.
What is the risk of incorrect acceptance in substantive testing?
It is the risk the auditor concludes an account balance is fairly stated when it is actually materially misstated. This is the more dangerous sampling risk for audit effectiveness.
When are positive confirmations preferred?
Positive confirmations are preferred when individual balances are significant, risk is high, many disputes are expected, or the auditor needs more persuasive evidence.
How should the auditor evaluate confirmation exceptions?
Exceptions should be investigated to determine whether they reflect timing differences, errors, fraud, or disputed balances.
What alternative procedures are used for non-responses to receivable confirmations?
Common alternatives include examining subsequent cash receipts, shipping documents, sales invoices, and customer orders.
What is a blank confirmation, and why can it be useful?
A blank confirmation asks the respondent to fill in the amount or information rather than confirm a stated number. It can provide stronger evidence, but may reduce response rates.
What should the auditor consider with electronic confirmations?
The auditor should consider authenticity, sender identity, data security, and whether the process prevents client interception or alteration.
What procedures commonly test the existence of accounts receivable?
Confirmations, subsequent cash receipts review, examination of shipping documents, and vouching recorded balances to supporting records are common procedures.
What procedures are effective for testing completeness of accounts payable?
The auditor often searches for unrecorded liabilities by reviewing subsequent disbursements, unmatched receiving reports, vendor statements, and unpaid invoices.
What procedures are common in auditing cash?
Common procedures include bank confirmations, bank reconciliations, cut-off bank statements, proof of cash, and testing reconciling items.
Why are bank confirmations important?
They provide direct external evidence about balances, loans, restrictions, pledged assets, and other banking relationships.
Why does the auditor review bank reconciliations?
Reconciliations help identify timing differences, errors, kiting, lapping clues, and whether recorded cash agrees with bank activity.
What is a proof of cash?
A proof of cash reconciles beginning and ending cash balances with receipts and disbursements recorded by both the bank and the books. It is useful when cash misstatement is suspected.
How does the auditor test inventory valuation?
The auditor reviews costing methods, tests pricing, evaluates obsolescence, compares cost to market or NRV where required, and considers damaged or slow-moving items.
Why is consigned inventory an audit concern?
The client may mistakenly include inventory it does not own or omit inventory it owns, but stores elsewhere. Rights and obligations become critical.
What if the auditor cannot observe inventory at year-end?
The auditor may observe counts at another date and perform roll-forward or roll-back procedures, or use alternate procedures if observation is impracticable.
What are roll-forward or roll-back procedures for inventory?
They reconcile quantities from an observed count date to year-end by testing intervening purchases, sales, and production records.
What procedures are common for property, plant, and equipment?
Auditors inspect major additions, review authorizations, test depreciation, inspect assets, examine disposal support, and review repairs for possible capitalization issues.
How does the auditor test depreciation expense?
The auditor evaluates useful lives and salvage values, recalculates depreciation, and checks whether methods are consistent with company policy and asset use.
What procedures are common for prepaid expenses?
The auditor inspects invoices and contracts, recalculates amortization, and verifies whether amounts relate to future periods rather than current expenses.
What procedures are common in auditing payroll?
Common work includes testing authorization of pay rates, reconciling payroll to personnel records, testing withholdings, and searching for ghost employees.
Why is revenue cutoff testing important?
It helps determine whether revenue was recorded in the proper period and whether shipments or services actually occurred before year-end.
What is the search for unrecorded liabilities?
It is a procedure focused on identifying payables or accruals that should have been recorded before year-end, but were omitted.
Why review subsequent cash disbursements when auditing accounts payable?
Payments made after year-end may reveal liabilities that existed at year-end, but were not recorded in the books.
How does the auditor test fair value of investments?
The auditor uses quoted prices where available, evaluates valuation models and assumptions when necessary, and assesses hierarchy classification and disclosure.
What evidence may be needed for derivatives and hedging activities?
The auditor may inspect contracts, confirm positions with counterparties, test fair value, evaluate hedge designation and effectiveness, and review disclosures.
What is a retrospective review of estimates?
It compares prior period estimates with actual outcomes to identify management bias, weak processes, or patterns of overly optimistic or conservative assumptions.
What are indicators of management bias in estimates?
Indicators include consistently optimistic assumptions, selective use of data, adjustments clustered at period end, and patterns that always improve reported results.
Why are written representations not a substitute for other audit evidence?
Management representations are necessary but not sufficient. They support other evidence and cannot replace direct testing.
What is the effect if management refuses to provide written representations?
Refusal is usually a scope limitation and raises doubts about management integrity. It can lead to a qualified opinion or disclaimer.
What is the purpose of the attorney letter?
It seeks information about litigation, claims, and assessments that may require accrual or disclosure in the financial statements.
Why can legal letters have limitations?
Attorneys may limit responses due to privilege or uncertainty, so the auditor evaluates whether enough evidence has still been obtained.
What kinds of management plans may mitigate going concern doubt?
Plans may include raising capital, restructuring debt, reducing costs, selling assets, or improving operations, but the auditor evaluates whether they are realistic and probable.
What if management's going concern plans are not likely to work?
The auditor treats substantial doubt as remaining and evaluates whether disclosure is adequate and whether the report needs emphasis or modification.
What is dual dating in an auditor's report?
Dual dating limits responsibility for a specific subsequent event to that event's later date, while keeping the original report date for other matters.
What if facts are discovered after the report date but before issuance?
The auditor investigates, determines whether the financial statements need revision, and updates procedures or the report date as appropriate.
What if facts are discovered after the financial statements are issued?
The auditor considers whether the facts existed at the report date, discusses the matter with management and governance, and may take steps to prevent future reliance on the report if revision is needed.
Why are subsequent cash collections useful audit evidence for receivables?
Collections after year-end can support existence and valuation of receivables outstanding at year-end.
Why is external evidence usually stronger than internal evidence?
Outside parties are generally more independent of management, reducing the risk of internal bias or manipulation.
When can internally generated reports still be strong evidence?
They can be persuasive if the auditor tests the completeness and accuracy of the report and related IT controls are reliable.
What is information produced by the entity, and why must it be tested?
Information produced by the entity includes reports, schedules, and data used by the auditor. The auditor tests its completeness and accuracy before relying on it.
Why are data extraction controls relevant to audit evidence?
If data is pulled incorrectly from a system, The resulting analysis may be flawed even if the source system itself is accurate.
What are computer-assisted audit techniques?
They are technology-based tools used to extract, analyze, recalculate, and test large volumes of data efficiently.
How should AI-generated audit insights be used?
As leads, not as unquestioned conclusions. The auditor corroborates AI outputs and evaluates bias, relevance, and data quality.
Why is journal entry testing a common further audit procedure in fraud responses?
Fraud often bypasses normal processes through manual or unusual entries, especially entries posted late, by senior users, or to unusual accounts.
Why might the auditor perform surprise procedures?
Surprise counts or unannounced testing reduce the chance that fraudulent activity can be temporarily concealed for the auditor's benefit.
What further procedures are common when related party risk is high?
The auditor may inspect underlying agreements, confirm terms with third parties, review board minutes, analyze unusual transactions, and expand disclosure testing.
What is a cutoff bank statement?
It is a bank statement for a short period, after year-end, used to verify reconciling items, such as outstanding checks and deposits in transit.
How does tracing differ from vouching?
Tracing starts with source documents and moves forward into the accounting records, which helps test completeness. Vouching starts in the records and goes back to support, which helps test existence or occurrence.
What if receivables are confirmed at an interim date rather than year-end?
The auditor performs roll-forward procedures on the intervening period and considers whether additional risk exists before relying on the interim results.
Why might the auditor confirm zero balance or inactive accounts payable vendors?
It can help test completeness because omitted liabilities may relate to vendors that do not show a recorded year-end balance.
When might an inventory specialist be useful?
A specialist may help when inventory is highly technical, difficult to value, or measured with specialized methods such as commodities, reserves, or complex manufacturing processes.
How does the auditor evaluate a management specialist's assumptions?
The auditor considers consistency with market data, company history, the specialist's methods, and whether the assumptions appear reasonable and unbiased.
Why is surprise cash count observation sometimes useful?
An unannounced cash count can help detect theft, lapping, or cash handling weaknesses by reducing the chance that balances are temporarily manipulated before the auditor arrives.